So in this video, I'm going to be talking about the 2 candle trend entry method, right? And this entry method is designed to get you in on turning points and trends in an early stage, basically, right? Now, first of all, we have to define what a trend is, right? So everyone knows that you're either going to have lower highs and lower lows in a downtrend, or higher highs and higher lows in an uptrend, right? But the basic premise for trends is they want to, you want to see a lower high, right, a low, pull back, and then lower lows, right? Lower highs and lower lows being made, and then vice versa, right? That is what traders will look out for. Now, this is represented on a price chart, right? All the time. And not just obviously as far as, where you've got, this obvious move here, and then you've got a pull back, and then you've got, a move down. Not just that, but with something called a 2 candle trend entry method. Now, this candlestick, if you are trading the daily time frames, what you probably want to do is go down to the 12-hour. This works on all time frames, by the way, but obviously the lower the time frame is, the more probably unreliable the entry, obviously, because there's some chop and other things going on as well. And with the daily and the 12-hour, you've got enough supply and demand to really decide whether that is enough demand or supply to get in, right? So a lot of traders will trade the daily, and if you're one of these traders, right, so you're trading the daily time frame, and let's say, for example, you see a candle that you want to get short at a level, right? So this was our supply zone, right? And in real time, you wanted to get short right here. Now, this isn't, for me, an entry candle. I don't like these pin bars. I prefer bearish pin bars if I'm going to get short, right? So I wouldn't have got in. Some traders, a lot of traders will, they don't necessarily differentiate. But let's say, for example, I wanted to get in, and then I see this happen, right? Now, some people would say that's, an engulfing candle. It closes at the bottom and fine, but it might not be an entry for you, right? Now, if we go down to the 12-hour, right, how this works is, what you want to see is a bullish candle, right, in the direction that you're not looking to trade in, right, in the opposite direction. And then what you want to see is 2 candlesticks, right, in the bearish direction. If you're looking to get, obviously, take advantage of a bearish trend at the earliest stages, right, you want to see a candlestick, a bearish candlestick close, and then you want to see the second candlestick close below the previous candle's absolute wick low. Because what this is doing, right, if we take the if we understand trends, right, is we're doing something like this, right? So we would have been on the open, moved up, and then we moved down, and then we've obviously got a little tiny pullback, right? Then we've got up, down, and then up again, right? Which is basically our trend requirement, right? This is what we're seeing in real time. So if we actually zoom into something like maybe a 1-hour chart, look at this. This was what we would call a trend, right? Lower highs and lower lows being made. Now, again, this is just an entry. It's not, the reason why, prices are going to move. We're just trying to get involved in a potential trend at the absolute earliest stages. And what you'll see is, if we go to, for example, the 12-hour, what you'll see is when you see this these trend examples, right? So you've got a bullish candle right here, and then you've got the two candle trend entry right here, right? You've got a bullish candle, then you've got two candles there. You've got bullish candle, two candles there, two candles there, right? And then you've got again two candles here, two candles here, right? And so on and so forth. Now, obviously, there's a few challenges as far as if you're trading on the daily and you're looking at some some pip risk. You really have to decide whether this two candle entry is, if you're trading just with pips, whether that's going to be enough for you to obviously, where you're placing stop loss, because some of these two candle swings can be quite large. So if your account can handle 150, 100 plus pips, then fine, brilliant. Because you obviously have to know where to put your stop loss. So if you were looking to get in here, what I wouldn't suggest is that you put your stop loss very tight. In fact, I trade with quite wide stops, right? Because if prices stop me out, then I know that I was definitely wrong about this trade, right? I'm not trying to be stop hunted or anything like that, right? So 130 pips, 140 pips would only represent 0.5, 0.4% of my total capital, right? But if you're not in that position, then what you can do is obviously go down to lower time frames. But just be aware that lower time frames are are less reliable from a trending perspective. But this is brilliant when you are looking for a reason to enter, but you just don't get let's say, for example, this candlestick here, right? Let's just mark it out. All right, now let's go to a 12-hour. You might not have necessarily have entered on this candlestick here from a daily perspective. But if we go down to the 12-hour, first of all, you get your pin bar. So that would have been quite a bearish candlestick anyway to enter on, but then you also get your two candle swing, right? So you would have seen prices would have started, and remember that the previous candle is bullish, right? You get your move lower, move higher, move lower, right? And then obviously move back, right? So the definition of a trend, you obviously get one here as well, right? And again, it's just an entry signal for you to potentially take advantage of potential trends from the downside or to the upside. Now, if you were to see something like this happen where you've got a trend, right? You've got bearish candle, bullish, prices move down, prices move up. Again, you have to think to yourself, okay, where are we in the bigger picture, right? Where are we in the massive picture, right? 97 pips as a minimum, so you're looking at about 135, potentially more than that. Obviously, you've got swings below here, but let's just say you had quite a wide stop, maybe about 140, 150 pips. Is there enough to the upside potentially, right, for you to at least grab more than a 1-to-1, right? So are you looking at the highs as your target, right? And because like I said to a fellow trader, that one of the challenges with trading daily charts is actually and trying to get 2-to-1s is that you sometimes have to go for hundreds and hundreds of pips, and not a lot of people can actually hold for that or those that pip at first, right? So sometimes you just want to put some money in the bank. And if you're going from even like a 1.5 to 1, a 1.4 to 1, then at least you don't have to win. Your win rate doesn't have to be so high in order for you to obviously make a profit. With a 2-to-1, all you have to do is win 34% of the time to pretty much just break even. So as long as you're going for more than you risk on a higher time frame, you should be fine. But again, just going back to just entries on a 12-hour. Right, what you want to see is, for example, that you want to see the swing, right? Bearish candle, bullish candle, and then a bullish candle, and let's just say that this was obviously a level that we were interested in, and then you take the entry. Remember, it's only an entry trigger, not the absolute reason to enter. You must do your due diligence, supply and demand zones, capture pain relief zones, etc. Right? So again, just to reiterate, sometimes you might not get a textbook entry, right, on a daily time frame chart, right, or a reversal. But let's say, and you're waiting for the level to, because this would have been, in fact, the supply zone was actually here as we made lower highs, lower lows, right? So you would have had this area right here, right? And let's say, for example, you really wanted to get in, right, and you were looking for a trend to the downside. What we would do is just zoom down in, because you wouldn't have seen anything on the daily. That would have been, or you might have seen maybe this engulfing, but maybe that spinning top if that's what you take. But then obviously this candle here again, if that's bearish enough for you, it might not be. But what you would have definitely seen is a trend right here. You would have seen obviously a trend right here as well. Stops way above the high. Give your trade some room so you're not stop hunted, especially around round numbers, right? The 124 was a round number. Traders tend to put their stop losses 10 to 20 pips above that. You can blatantly see that was that's a nice little stop hunt there. Took out those stops and then carried on to the downside. Again, these they do work on the on lower time frames, but again, just be aware that they are slightly less reliable, and I want to see a bit more supply or more demand in my trading. So I tend to use these on higher time frames like the 12 hour and even now down to the 8 hour. So hopefully that helps. Again, if you have any questions, just email me at info@trading180.com.